In this video, we're going to cover how to move an active 401k into gold. Specifically, we're going to look at 401k loans. Now, this is the third video in a series. In the second video, we discussed the 5 options for moving an active 401k into gold, and we arrived at the conclusion that a 401k loan is probably the best of those 5 options. We'll cover the details of 401k loans in this video. Now, I have to start with a disclaimer. I am not your investment advisor, so I can't give you financial advice. This is strictly educational information so that you can make an informed decision about how to manage your own investments. Now, I also need to disclose that the contents of this video are based on my personal research. You need to independently verify this information before taking any action. And in fact, before you make any changes to your investment portfolio, I highly recommend that you consult with your own personal investment advisor, your financial planner, and your tax consultant. Those people understand your unique circumstances, your tolerance for risk, and your investment objectives. They are in a far better position to offer you financial advice than I am. Let's do a quick summary of what we covered in the second video. There's a difference between an active 401k and an eligible 401k. An eligible 401k is an account that you had at a previous employer. The 401k that you have at your current employer is considered active by the IRS, and the IRS greatly limits the options that you have for that account. With an eligible 401k, it's quite simple to move that money into a precious metals IRA. If you have an active 401k, the IRS does not allow rollovers and transfers. This slide shows us the 5 options that we covered in the second video. Let's do a quick summary here. Our first option, well, it's not really an option because the IRS doesn't allow us to do this. You think that we could just close out our 401k, cash it out, pay the taxes, pay the early withdrawal penalty, take the money and do whatever we want with it. Again, the IRS doesn't allow us to do this. The money in an active 401k is essentially stuck there as long as you are employed at your current employer. The second option, you can stop contributing to your 401k and redirect that money into a purchase of physical gold. The third option, you could leave your current employer. That would make your active 401k an eligible 401k. But in our current economic environment, I certainly don't recommend that anyone leave their job simply to make their 401k money accessible. Now is not the time, in my opinion, to be changing jobs unless you have a strong justification for doing so and have a rock-solid job lined up to go to. The next option is an emergency withdrawal. And there are well-defined reasons for taking an emergency withdrawal, and buying physical gold is not one of them. So to claim that you were taking an emergency withdrawal, you would be deceptive at best and quite possibly committing fraud. And obviously, I can't condone or recommend that as an option. Now, a self-directed 401k, these are rare based on my experience, but some 401ks allow you to buy and sell individual stocks within your 401k account. Check with your HR department or your 401k plan administrator and ask if that is an option within your plan. You certainly have access to mutual funds within your 401k, and almost certainly there's one or more growth funds in your selections. There may be a growth mutual fund that offers you some limited exposure to the precious metals, and the point I made in the second video is that exposure is not the same thing as ownership. What we're really trying to achieve is ownership of physical precious metals. And then the final choice, and that's what we're focusing on in this video, is a 401k loan. Now, it's really nobody's business why you take a 401k loan, but almost certainly you'll have to fill out some form or talk to someone in your HR department, and they will ask, well, what are you going to do with the funds from your loan? Again, it's none of their business, but if you feel a need to answer their question, I suggest that you simply say, I'm going to invest the money in other investment opportunities. And if they press you for details, tell them that you're not at liberty to disclose the details. And again, it's really none of their business. The IRS limits a 401k loan to 50% of your vested balance up to a maximum of $50,000. After you take the loan, the repayment will be amortized over a 5-year period, and the payments will be automatically deducted from your paycheck. Now keep that in mind and plan for it in your finances. The repayment of this loan is going to automatically come out of your paycheck. Now the last 2 points on this slide are a little bit confusing. We're borrowing pre-tax money out of our 401k account, but we're repaying it with after-tax money from our income. But the interest that we pay on the loan goes back into our 401k account. And so we'd really have to sit down with pencil and paper to figure out whether we were ahead or behind at the end of that transaction. Your ongoing participation in the 401k plan may be affected while your loan is outstanding. You may not be able to contribute. It will depend on how the plan is set up. And if your company matches contributions, you may not be able to receive those matching funds. Check with your HR department or your plan administrator to find out the details on that point. If your employment ends while this loan is outstanding, the balance of the loan becomes due on the next tax date. So for example, if you took a loan Monday and your job ended on Friday, you would have to repay that loan in full before April 15th in the coming tax year. If you fail to repay the loan, the IRS will treat the unpaid balance as a distribution. It will be taxed as regular income, and if you are under 59 and a half years of age, you will be assessed a 10% early withdrawal penalty. Some of the parameters of 401k loans were changed by Congress in 2020 because of the medical events that were occurring. The maximum loan was increased from $50,000 to $100,000, and instead of limiting you to only 50% of your vested balance, Congress allowed 100% of that vested balance to be borrowed. For example, if you had $10,000 in your vested 401k, you could borrow all of that $10,000. Now, we started in 2020 with the CARES Act. When that expired, Congress enacted the Secure Act, and then that changed into however you pronounce the third thing listed on this slide. I do not know what the current status of all of these congressional actions is. If you ask your HR department or the 401k plan administrator, they should be able to tell you exactly where we stand today. Are we limited to $50,000 or is it $100,000? Are we limited to 50% or is it 100%? Again, check with your HR department or the plan administrator for the details on that. Now, the main advantage of a 401k loan is obvious. You end up with cash in hand that you can take down to your local coin shop and buy physical silver and gold. That's the investment objective we're trying to accomplish, and the 401k loan lets us do that. There's a second advantage to taking a 401k loan, and that's diversification of your investment portfolio. You move money out of paper stocks, bonds, and mutual funds and into tangible goods that have real value, silver and gold. There are several risks with taking a 401k loan. The first is that you may lose ongoing participation in the plan. You may not be able to contribute to the plan while the loan is outstanding. And if your company matches your contributions and you're not allowed to contribute, well, obviously you're going to lose those matching funds as well. The second risk is that your job could end while this loan is outstanding. In that circumstance, the remaining balance of the loan becomes due on April 15 of the coming tax year. To discuss the last two risks on this slide, we need to understand what premiums are when we're talking about physical precious metals. When we look at a chart showing us the price of silver or gold, let's talk about silver. If we look at silver today, it's selling for about $22 an ounce. That's what we'll see in a price chart. However, when we go to our local coin shop, we find that most of the 1 ounce silver coins are more like $30 an ounce or $32 an ounce. The difference between the $22 an ounce price we see in a chart and the $30 price that we pay to our local coin shop, that difference is a premium. Right now, those premiums are very elevated because the demand for physical precious metals is outstripping the available supply. There are so many investors moving their money into physical silver and gold that there simply isn't enough of it available. So people are sitting on waiting lists for as much as 6 weeks to 3 months just to obtain the metal that they'd like to purchase. Now, these elevated premiums are not a normal part of the precious metals markets. Again, what's happening is that investor demand is overwhelming supply. Now, that situation could change. If enough supply comes into the market to satisfy investor demand, these elevated premiums could go away. If you got forced into a situation where you had to sell your metal, say in the next month or two, you may end up losing money when you resell that coin. The $30 coin, you may only be able to sell it for $25. And again, that's a risk that is unique to the current market, and that risk is caused by overwhelming investor demand. And of course, investors all over the world are trying to accomplish exactly what you are trying to accomplish. They want to move their retirement savings into physical precious metals. It's a smart thing to do right now. And then the final risk listed on this slide, you could come into some kind of financial crisis where you needed the money from your 401k account and it wouldn't be available for a 401k loan because you already borrowed it, and then you spent that money on physical precious metals. Now, if you have to go resell that metal and the elevated premiums go away, again, you could lose money. And so that's a risk that you need to be aware of and you need to accept. And so here's the bottom line, folks. If you have an active 401k and you want to move that money into physical precious metals, a 401k loan is probably your best option. Now, if you have an eligible 401k or other tax-advantaged retirement accounts like a 403b, a 457, a TSP, an IRA, a pension plan, or an annuity, it's very easy to move those funds into a precious metals IRA. In the description below the video, you'll find a link where you can obtain a wealth protection kit that will show you exactly how to do that. I hope I've provided value in this video, and I look forward to sharing more information with you in the future.